Finally, the correction has started in the US stock market. After S&P 500 and Nasdaq, both the indices made the all-time high in the last week, the correction has started. The correction in the uptrending market is a normal thing. Market always makes impulsive wave and corrective wave in the process of going up. So in the last week, S&P 500 corrected by 2.08%, while Nasdaq 100 corrected 3.42%, and Russell 2000, that represents these small cap stocks in US stock market, has corrected 3.99%. So these are the corrections week on week basis. Although the year so far has been very good, where S&P 500 has given a return of around 23%, while Nasdaq 100 has given a return of around 21.2%. So the broader market has outperformed the tech stock index, that is Nasdaq 100. So what is next in S&P 500? So in this video, we'll undertake the technical analysis of S&P 500. We'll briefly touch the Nasdaq 100 too, because both the indices have made all-time high, and we will try to determine the support and resistance which market might respect in the upcoming week. I am D K Sinha. Please do not forget to like this video, subscribe the channel, hit the notification bell for updates. Let's begin. So what sentiments are driving the US stock market? So let us check the fear and greed index against S&P 500. So currently, post closing of the market in the last week, it is reading 51. So it is in the neutral zone. 1 week ago, it was reading 62. So there has been some deterioration in the market sentiments. Although the market is not at all fearful even after the correction has started in S&P 500. If we check the volatility of the market, so let us refer to the VIX index with respect to the simple moving average 50 period. So this particular index is showing some slight jump in the volatility in the market. However, it is still below SMA 50, so it is in the neutral zone. So overall market sentiments is quite stable, and despite of the correction, which is a normal phenomenon in the markup phase of the market is looking stable and looking good. Let us straightaway go to the price chart to undertake the technical analysis, determine the support and resistance level. I'll explain the price action too, so that you can understand if you are a beginner in the stock market. Friends, do not forget to like this video. So this is the weekly price chart of S&P 500 index, and index finally in the last week closed at 5,870.62, and thereby it was bearish by 2.08%. But the overall structure is bullish. Market structure is higher highs and higher lows kind of a structure. And even if you look at the last candle, yes, there is a bearish candle formation, but it is not a candlestick pattern. Even the candle has not pierced through the prior bullish candle of the last week, prior week. Now, considering the overall structure of the market, in the last week, market made an all-time high of 6,017.31, and then correction started. So if we consider the correction which has started, and the median of the prior bullish candle stands at 5,860, which should act as an intermittent support, because it is also, it was the resistance area earlier, which is a median of the prior bullish candle. So this is the immediate support, and in the last week, market although made a low of 5,853, but finally managed to close at 5,870. So the median of the prior bullish candle is defended. Now, if you look at the trend line, this is the price support. Price has taken support here. Price has taken support here. So this trend line is a good support in S&P 500 index. Let us go to the daily price chart. Now coming back to the daily price chart, what we can see, it was a breakout of a rising wedge that we discussed in the last week. This was the resistance area and this is the support area. So zone between these two trend line will act as a good support. Now the price is trading quite in proximity of EMA 21 and this is the area of resistance which is coinciding with the median of the bullish candle in the weekly price chart. So this is the gap. Broadly, this gap is very, very important and will provide the support to S&P 500 during this correction. So the gap is at 5,782 and if we calculate the retracement level with respect to the prior impulsive wave, 78.6% retracement level comes at 5,763. So this becomes the important demand area from 5,763 to 5,782. If it breaks down below 5,860 level, we might see correction leading to this demand area. However, this demand area is very significant because there is a confluence of this rising trend line besides the confluence of exponential moving average 55 period. So overall trend is quite bullish. So what will be the target? I'm talking about the short-term target, although we have already discussed multiple times on this channel regarding the target of the rounding bottom chart pattern spanning over 2 years that comes at around 6,530. But this target may not be achieved in the straight line. So what could be the potential target once this correction is over and there is a resumption in the trend? So we can always calculate the target on the basis of earlier cup and handle chart pattern. This is one way of calculating it. So let us now project the target on the basis of cup and handle chart pattern. So I am measuring the depth and projecting it. So what it has done, it has achieved the target of 61.8% expansion level and then this correction started. So the price action is quite rhythmic. So the next potential target would be around 6,195 to 6,200 in S&P 500. The overall structure is bullish. Short-term trend, intermediate trend, long-term trend are bullish. And this gap, although it looks like a breakaway gap, but this gap will provide a good support to S&P 500. Now let us move to the price chart of Nasdaq 100. Now this is the price chart of Nasdaq 100. Now if we calculate the target on the basis of the rounding bottom chart pattern, see the target then in that comes, this is the continuation chart pattern, cup and handle, this is the handle portion, this is the cup portion. So once the trend resumption takes place, the next potential target is 22,376 and it has a potential to go to 23,683. So where is the support area? Now if you see, this is the neckline area of this continuation chart pattern. Price is trading quite in proximity of this important neckline area and there is an existence of a gap. Here it has created a gap. So gap exists at 20,249 and there are multiple support over here. So that level comes at 20,000. So 20,000 to 20,249 is the immediate demand area and which has an intervention of exponential moving average 55 period as well. So overall trend is bullish in Nasdaq 100 too, and here to the short-term trend, intermediate trend, long-term trend is bullish. So what is the conclusion of the analysis of S&P 500 and Nasdaq 100? Number one, the overall trend is still bullish. Even the short-term trend is bullish. So the correction is quite normal and it is not serious in nature. The gap which is existing in S&P 500 and Nasdaq 100 is likely to provide a good support in the upcoming week. And the targets which we have discussed is likely to be attained after the trend resumption takes place. What do you think about the Nasdaq 100 and S&P 500? Will the target achieve as discussed in this video based on the chart pattern, your comments are welcome in the comment section of this video. Friends, do not forget to join me every weekend for a live streaming session on Market Pulse. This weekend live streaming session is significantly important, which enables you to know about the various indices in the US stock market. At the same time, in live session, you can ask me any stock for instant technical analysis during the live streaming session. Don't forget to join the membership of this channel to stay ahead. Thank you very much for watching. Looking forward to meet you very, very soon.